struggling U.S. economy. Not right now, as U.S. executives remain uncertain about whether to invest in the American economy. Press TV's Rhonda Pence reports.
Cash is king in the United States, but who is wearing the crown? Not the federal government, which is paying out hundreds of billions of dollars in stimulus funding to save and create jobs. Not average Joe Americans scrambling for work while unemployment is at a whopping 10.2%, the highest rate in 26 years. A closer look at balance sheets shows it's U.S. corporations, many of which are hoarding tens of billions of dollars.
You can't always tell the difference between being greedy and being a smart business owner, can you?
Reports just out show many companies have piles of cash on hand. Nucor has $2.2 billion, Google $22 billion, Cisco $35 billion, Microsoft nearly $37 billion, Citigroup $244 billion.
They've got to shrink. I mean, they haven't got any option. The federal government has already invested $45 billion and is, I think, the largest single shareholder in that corporation.
Between January 1st and November 2nd, U.S. corporations raised nearly $741 billion by issuing bonds, up from the $522 billion raised during the same period last year. U.S. executives say they're hanging on to their billions because they lack confidence either in the U.S. economy or in the government. Some are recovering from last year's near-death scare when many U.S. businesses went under.
General Motors and Chrysler, as we knew them a year ago, are no more. I think the AIG Corporation is going to disappear. Fannie Mae, Freddie Mac, they're both way underwater.
But whatever the reason, some analysts say the money could be used to build new stores, shopping malls, and plants, which could create jobs.
They're not going to do it just on a hope and a prayer. They're going to do it when they see tangible evidence that consumers are going to buy the products that are being produced.
Experts say overall, companies are doing better than American consumers or the federal government, which is projected to rack up $9 trillion in deficits over the next decade. Some experts say without investment from big business, the U.S. could fall back into a recession. For Press TV, Rhonda Pence, Washington.
Individual bankruptcies in Britain hit a 49-year high during the third quarter of 2009. That's according to Britain's Insolvency Service. The body reports that there's been more than 35,000 personal bankruptcies in England and Wales during the 3 months up to the end of September. That's a 28% increase compared to the same period last year. Most of the bankruptcies have been filed by people who lost their jobs during the economic recession and are unable to pay their debts. Britain is still suffering from an economic recession, and analysts have warned that the insolvency figures will likely continue rising even if the economic meltdown comes to a formal end. 5 more U.S. banks have been shut down, pushing the number of bank failures this year to 120. The financial institutions were based in California, Georgia, Michigan, Missouri and Minnesota. The chairman of the Federal Deposit Insurance Corporation, or FDIC, says bank failures will remain elevated even if the economy begins to recover. Sheila Bair says the failures are mainly due to the industry's continued grappling with loan losses and balance sheets. She says the industry's woes are migrating from residential loans and complex securities to more conventional types of commercial loans. The closures are estimated to have cost the FDIC more than $300 million. The current economic downturn dragged down Washington Mutual, the biggest bank to fall in U.S. history. The financial institution had about $307 billion in assets.